You might be trading every day, still placing trades, still analyzing, yet your account isn't growing, and your mind feels heavier with each week. Some months you make a little, then a few wrong trades pull everything back to the starting point, along with exhaustion and self-doubt. The problem isn't a lack of tools or knowledge. It's that from the very beginning, you never truly knew what you were trading for. How much profit do you want your trading to bring you each month? At first glance, it sounds like a very simple question, but I dare say this: 99% of the people who are losing money out there cannot answer it clearly, coherently, and completely. Why? Because they have never had a specific financial goal. They don't know how many percent of return they actually need each month. They also have no clear concept of how much risk must be accepted in exchange for that number. And most importantly, they do not truly understand that trading is a business, not a money printing machine fueled by dreams. A person who opens a small coffee shop calculates every unit of profit, every cost of ingredients, every risk of losing customers on rainy days or slow afternoons. Someone who runs a clothing store knows exactly that if they don't sell at least 30 shirts a day, they are losing money. Yet a person who throws money into Forex, crypto, or the stock market often cannot answer one very basic question: how much money do I expect my account to generate this month? Why do I speak about this with such seriousness? Because I used to be exactly that person. Head down in front of the charts, hoping price would move in my favor. Entering trades without knowing how much I would make if I won, or how much I would lose if I failed. Trading like a blind gambler, chasing luck in the intoxication of the market. Until one day, I met him, the mentor I mentioned in previous videos. He looked at me and asked only one question: how much profit do you want to make each month? I froze. I couldn't say a word. He smiled gently. If you don't know where you want to go, how can you know which road is the right one? From that moment, I understood that trading does not begin with learning technical analysis. It does not begin with buying robots or indicators. It begins with a question that seems ordinary. What is your monthly financial target? A concrete number, not a wish, not a vague hope. Let me ask you again with complete seriousness. How much capital are you trading with? How much profit do you want that account to generate each month? And what is the maximum percentage of risk you are willing to accept to reach that number? If you cannot clearly answer these three questions, I don't need to see your trading system. I don't need to know which indicators you use or how you read the news. I am certain of one thing: you are walking the same path that 90% of traders are walking, and the destination of that path is usually losses, blown accounts, and quitting. That is why today's video is not for dreamers. It is for those who truly want to take trading seriously as a way of life. Together, we will clarify what level of profit expectation is actually reasonable. Why do so many people set goals of 20%, 30%, even 50% per month and end in failure? And how do you build a sustainable profit system, one that is enough to grow wealthy, but not enough to kill you? If you find this video valuable, share it with a friend who is struggling with trading. And if you don't yet have a Forex or crypto trading account, you can register through Quiet Trading's link in the description to begin the journey the right way, starting from the very first question. From this point on, I want to give you a financial map, a different way of looking at profit, where every number you set determines whether you survive or get swallowed by the market. Now, let's answer a question that seems very simple. How much is enough? In 1 month, how many percent should your account generate? Many newcomers to the market often say, I want 20% a month. If things go well, 30%. In an excited month, maybe 50%. It sounds ambitious, and it is extremely dangerous. Because to reach that level of return, you are forced to push risk to an extreme, a place where a single wrong trade can instantly turn all your progress into a negative number. I have lived through that phase myself. With a $1,000 account, I hoped to make $200 or $300 a month. There were times that in just 1 week, everything went exactly as planned. But the following week, one small slip was enough to bring everything back to the starting line. And that is a hard truth to swallow. The higher the profit, the closer the risk. The bigger the expectation, the higher the price you must pay. Instead of chasing flashy numbers, I began to ask myself a different question. How much do I actually need to live, to reinvest, to grow in a sustainable way? From that moment, I shifted my mindset. A mindset for small accounts. With accounts under $5,000, a target of 2 to 5% per month is already a serious challenge. It may sound small, but don't forget, this is the foundation stage. You are learning how to survive. You are learning how to protect capital first. With accounts from $5,000 to $20,000, expectations can be raised to around 4 to 7% per month if the system is solid enough. And for large accounts, $50,000 and above, a stable 3 to 5% per month already places you in a very small group within the market. Why is that? Someone with $50,000 only needs to make 2% a month to earn $1,000. $1,000 consistently every month is already a livable income in many parts of the world. And if profits continue to be reinvested, the power of compounding will turn that number into something far beyond imagination after a few years. I once heard a real story from my mentor. He started with a $1,000 account, setting a goal of just 2% per month. After 3 years, that account grew to $12,000. From that point on, he began withdrawing profits regularly while maintaining strict growth discipline. Today, he lives steadily at 3% monthly returns from a 6-figure account. He didn't get rich fast. He isn't famous. He doesn't show off, but he is free and dependent on no market. That is the kind of success I pursue. And the question for you now is this: which stage are you in? If you are just starting out, think like someone paying tuition. Don't rush for high returns. Focus on surviving month after month. If you already have experience, choose a profit number you can achieve consistently for 6 consecutive months. And if you have significant capital, train yourself to think like an investment fund. Just 3 to 5% per month, stable, safe, and consistent, and you will go very far.
I used to believe that high profits were proof of skill, but now I understand this. The ability to maintain small, consistent profits over many months is the true line between a trader and a gambler. Because the market always has waves, it is always moving, and only those who can control their greed are able to pass through one storm season after another. Once you know how much profit you expect each month, the next question must be this: how do you reach that number with the most reasonable level of risk? This is the moment you shift from someone merely testing their luck in the market to someone who truly manages money like a trading business owner. First, choose the account level that matches your current stage. Level 1, ultra small accounts, under $500. At this stage, profit is education. Do not focus on making money. Focus on controlling risk on every trade, keeping a trading journal, and building disciplined execution habits. A suitable target is 1 to 2% per month. The money is small, but discipline and market understanding are the real assets. This is the stage where you grow roots. The deeper the roots, the harder it is for future storms to knock you down. Level 2, small accounts, from $500 to $5,000. This is the stage where you train your personal financial plan. Let's say you have a $1,000 account and set a monthly target of 2%, that's $20. It sounds insignificant, and precisely because it is small, you remain calm. When you can consistently make $20 a month without blowing your account, you have passed the survival stage. At this point, things start to become clear. I risk 1% per trade. If I lose $10. If I win, with a 1 to 2 risk-reward ratio, I make $20. Just one winning trade and I have completed my goal for the entire month. That is a clean, focused, and efficient way of thinking. Level 3, medium accounts, from $5,000 to $20,000. This is where your skills are truly tested by fire. You begin to face stronger emotions because a single winning trade can bring in several $100s, and one losing trade can keep you awake all night. At this stage, capital management becomes a matter of survival. You need a clear plan, the maximum number of trades per week, risk per trade capped at 0.5 to 1%, weekly stop-loss limits, weekly profit targets, and clear decisions on profit withdrawal or reinvestment, all defined in advance. With 3 to 5% profit per month, you are building a stable growth engine. Level 4, large accounts, above $20,000. At this point, everything changes. You are no longer just an individual trader. You begin to think like a small fund, where risk per trade may drop to as low as 0.25%. Fewer trades, higher selectivity, and patience becomes mandatory. Because you understand this, preserving the account is more important than making more money. Just 2% per month, about $400 on a $20,000 account, already creates a steady income stream. From here, you can withdraw profits to live, reinvest into other markets, or expand the account at a compound rate. And that is how trading turns from survival into sustainability. And no matter which level you are at, one thing is always true. Trading only brings real freedom when you clearly understand every number that belongs to you. How large is your current account? How much risk do you take on each trade? What is your profit target? When do you stop trading? And how much profit should be withdrawn to support your life? It may sound theoretical, but these very questions are what helped me and many other traders escape emotional trading, impulsive entries, and outcomes driven purely by luck. You can take a sheet of paper, print it out, or write it by hand. How many dollars are in my account right now? Each month, what percentage return do I want, and how much money does that represent? What is the maximum percentage of risk I accept per trade? What is my win rate? At what level of loss do I stop trading? At what level of profit do I withdraw, and how much do I reinvest or spend? This is not a game. This is a financial plan for your own life. Trading will not make you rich overnight, but if you are persistent enough, strategic enough, and clear-minded enough, trading can become a tool that helps you reach freedom far earlier than most people. My mentor is now over 60 years old, gray hair, living in a small house in the suburbs, no noise, no social media, no showing off six-figure accounts. Yet he has lived off trading for more than 10 years. No courses, no students, just a laptop, a cup of hot tea, and a few mouse clicks each week. When I asked him why he didn't trade more to increase profits, he simply smiled. Trading more does not mean earning more. What matters is entering the right trade at the right time. His strategy is distilled into 3 principles. First, volume is the truth. Second, price action is the language of money flow. Third, patience, waiting like a hunter for the prey to step into the right range. Volume is the truth. The market can deceive, signals can be noisy, indicators can lag, but volume, trading volume, is the real footprint of large money. He doesn't use volume in a simplistic way, like buying just because a green candle appears with high volume, or selling because a red candle comes with declining volume. He goes deeper. He observes volume profiles, accumulation and distribution phases, and the imbalance between price and volume at key support and resistance zones. For example, when price drops into a support area, but volume suddenly spikes while price fails to make a new low, that is a sign of large money quietly accumulating. When price rises strongly, but volume stays flat or weakens, buying pressure is fading, a warning of distribution. Price action is the language of money flow. Volume is the footprint, price action is the expression. When you combine the two, you can read the market psychology the way you read a chess player's face. He doesn't apply candlestick patterns mechanically. He focuses on the context in which a candle appears, within meaningful price zones, and the reaction immediately after that candle. For instance, a pin bar forming at a supply zone, accompanied by a large volume spike. That is a distribution signal. Or an inside bar after a false breakout with explosive volume. That is a fake retest designed to trap inexperienced traders. Fewer trades, right levels. That's how you survive long term. Each week, he patiently waits for only 2 to 3 opportunities.
There were even weeks when he placed no trades at all, but when he did enter, it was precise. He never tried to catch an entire wave, he only took the middle part where probability is highest. I once asked him, "Aren't you afraid of missing big moves?" He said, "I don't need to catch every wave. I only need a few certain segments, enough to live, enough to be free." Quiet profits. That is the way he chose to live. His account was around $80,000. Risk per trade never exceeded 0.5%. His average win rate stayed around 6 to 7 trades out of 10. Each month, he made between $1,000 and $2,000, steady with little fluctuation. That amount was enough for him to live, drink tea, read books, and do nothing else. No pressure, no fear of blowing the account. He didn't need to stare at the screen 8 hours a day. About 30 minutes each evening was enough to prepare, analyze, set alerts, then shut down the computer and return to life. The lesson I took from that was simple. Before, I used to place dozens of trades each week, wins and losses mixed together. One week up 300, the next week down 600. Emotions rose and fell like a roller coaster. But after learning from him, I slowly changed. I focused on fewer trades, waited for truly clear signals, volume confirmation, favorable price action, and a modest goal, around 2% per month. From then on, I felt lighter. Trading became a tool, no longer a psychological chain. You can begin the same way. Learn to read volume seriously, not superficially. Use price action in specific context, not rigid textbook patterns. Set alerts. Wait for clean entries. Instead of clicking endlessly, rewrite your personal strategy. Trade less, but with higher probability. Train yourself to look at charts like an analyst, not like a gambler. Trading is not a playground for the impatient. The market will always be there. Opportunities will return. Those who know how to wait are the ones who survive and go the distance. When you truly understand the value of trading profits, you will never underestimate 3% per month again. One day, I asked my mentor why he was satisfied with only 2 to 3% per month. "It's too little," I said. He didn't answer right away. He poured tea, slid the cup toward me, and said, "Drink, then listen carefully. You will understand why most people spend their lives chasing money, but only those who understand the nature of money are able to keep it." 3% per month sounds small, but that is 36% per year. And now, place that number on the scale against almost every profession out there. You will see that trading, when done correctly, is a financial model with a remarkably strong rate of return. Compared to bank savings, in 2025, interest rates in Vietnam fluctuate at only around 4 to 6% per year. If you deposit 100 million VND into a bank, after 1 year, you earn only about 4 to 6 million in profit. Now think about this. If a trader can generate 3% per month, roughly 36% per year, with the same 100 million, that becomes 36 million in profit after a year. That is 6 to 9 times higher than bank savings. Compared to real estate, many people still believe land investment is an easy path, but what is the reality? You need to put down several hundred million, sometimes even billions, to buy a piece of land, then wait 1 to 2 years hoping for a 10 to 20% return. During that time, you deal with taxes, notarization, legal procedures, and the risk of frozen zoning plans. And most importantly, liquidity is very low. You can't always sell when you want. A skilled trader with a $100 million account can realistically generate 30 million in profit in about 10 months and still withdraw money at any time. No brokers, no paperwork, no waiting for prices to rise. Compared to traditional business, suppose you open a small coffee shop with initial capital of around 1 to 200 million. Monthly costs for rent, staff, utilities, and ingredients easily reach 10 to 15 million every month. To make a profit, you must sell hundreds of cups every day, compete on every small margin, and exhaust yourself with service, weather, and competitors. If things go well, you might earn 10 to 15% per month, around 15 to 20 million, in exchange for dozens of working hours every day. Trading, when done properly, with an account of similar size, can generate comparable profit with just 2 to 3 high-quality trades per week. No rent, no customers to manage, no waking up early or staying up late. Compared to long-term stock investing, if you choose the right stocks, returns may reach 10 to 15% per year, but if you choose wrong, losses can be significant. And even when you choose right, you still endure months of sideways movement or deep drawdowns, not to mention the emotional strain when markets fall sharply. A professional trader in control of their system can generate 2 to 3% per month with far more active risk management. Compared to high-income professions, doctors study for 6 to 10 years, engineers require university education and years of experience, lawyers study law, complete internships, and pass licensing exams. All of these professions deserve respect, but they all demand enormous time, cost, and pressure, and not everyone reaches the finish line. Trading, if you study and train seriously for 2 to 3 years, can absolutely allow you to build a personal financial system that generates comparable income without being bound by time or workplace constraints. So why do so many people still not believe in it? Because most outsiders think trading looks too easy. Online markets, a phone is all you need to trade, anyone can open an account. And precisely because it is easy to enter, they underestimate it. They join with a gambling mindset, trade emotionally, blow their account, then walk away saying trading is a scam and impossible to live on. Profits are hard, losses come fast, but the problem is not the market. The problem is approaching the market like a game of chance instead of a serious profession. Once you understand this, you will stop making false comparisons. 3% per month sounds small, but with compounding, a $10,000 account can grow to more than $50,000 in 5 years. That level of growth is something very few professions can achieve with such low cost and controlled risk.